Mannix, good morning, man. Morning. So we got a little gap down going on overnight. I wouldn't say that's too unexpected. The only name. So all of my longs are trimmed, for instance. Like ARC, I bought at 59, and I'm already trimmed on this move up. So even though we're gapping below the 20, and it kind of sucks, we're right somewhere in here on the daily. I can handle that. If we're gonna close down here, I could just close it. I'm gonna give it the day to work, and then just kind of live with the results because I'm already trimmed. CCL, another one. I'm already trimmed. I trimmed, in fact, into this 5-day push, and then I haven't done anything throughout this entire consolidation. So I'm good there too. IBIT, it's just been kind of, chugging along sideways. And if we close below the 20, really about 65 and a half bucks, I will be out of the thing, which is kind of where we're at now. Oklo, I'm well trimmed into this push. I'm still in from 58, so this gap down doesn't really bother me. I didn't trim any more yesterday, and we're down about $8 off those highs, $7 off those highs, but nothing really there for me to do either. And then finally, Toast. I'm in from $46, and I took some off on the 29th when we took out prior day low. So there's really nothing for me to do here with this one either. Just let it work. And then on the flip side of that, I do have some shorts, and those are gapping down, right? I've got some SoFi that is gapping down about 70 cents overnight. I have some Rigetti that is gapping down, I don't know, quarter overnight. And then I've got some Joby, and this one's being a little bit more stubborn. It had a nice little gap down for about $1, but then it had some news this morning with I think it was, I don't know what the news was. L3 Harris Technologies and Joby team up to develop military aircraft. So yeah, there's not, this is actually, that's a great question. And I guess this is actually why I do like to try and get, when the market gets a little bit frothy, when it gets a little bit extended from the 50, when I'm seeing evidence of some names breaking down, this is why I intentionally play the short side. And it's to, kind of protect my own long portfolio. All right. Thank you, baby. I'll be out there in a moment. So yeah, I do intentionally play the short side, and that is to be able to hold my longs comfortably. And then, I'm not really moving my equity curve up in some big way. I'm more so just keeping it flat, because what's happening is I'm in trimmed long positions. And then, for the most part, like Rigetti is a full size short. SoFi is a trimmed short, but profits gained already. So that's the profits gained on a SoFi short is allowing me to just hold my longs. And that's the whole idea behind being comfortable playing both sides of the market. Yeah, and I think the pullback should be bigger in terms of price, and nothing would be wrong with it. I didn't trade FIG yesterday. I don't trade recent IPOs. Gold is booming this morning. Dollar's coming down. Yeah, no IPOs for me. Yeah, Roger, I'm not one to think about seasonality like that, because if we just went on a 40% run for the Nasdaq and it was February, I would be thinking the exact same thing. If we just went on that kind of run and it was September, I would be thinking the exact same thing. It could be November. It could be, Santa Claus rally coming up. I would literally be thinking the exact same thing. Yeah, I mean, who cares about seasonality, dude? That's a figment of everybody's imagination. What's not a figment of everybody's imagination is the fact that it just went up 44% from the lows in 3.5 months. That's reality. Seasonality is just, I think, more of a coincidence that I think now people see, and then they trade around that, basically. I don't know. I personally think we get a cut in September. That was my opinion going into the last FOMC meeting. I still think that that's true. Yeah, I commented on IBIT. My thoughts are if we close below the 20 simple moving average, I'll likely get rid of it today, but I'm just going to let all of my longs work. If my longs go on to fade, my shorts will go on to work, and my equity curve will stay fairly flat, which is, like I mentioned, part of the reason that I short. JJ, great question. I don't care about weekly. I would go further out. So, and because you're thinking about strength as it relates to an institution, right? Institutions, if they're going to keep a group strong, yes, it starts out on the weekly, right? It'll like have outperformance for a weekly, but you want to go out to like 3 month, because remember, a stock goes up, it then digests, and then it goes up. So that up period has to take place for like a month to 3 months. And then all of a sudden, they digest, and then you're looking for the groups that are strong from there. Right. So I put more emphasis on 1 month, 3 month, 6 month instead of like 1 week and 1 day. I mean, solars could be strong for a day. Does that mean that the group is strong? No, it could just mean that they're being short squeezed because they've gotten beaten up so much. So good to remember. Do I see any groups gaining momentum or starting to lose it? Yeah, there's a lot of the growth side of the market is starting to have momentum wane, right? Stocks that already made huge moves, so like mid cap, the recent high flyers. But in terms of individual groups, it's like semis are still strong. They've already made a huge move. The groups that are weak, like home builders, are still fairly weak. The oil and gas stocks, while I like some of the bases on the weekly, I think they're still fairly weak. Home builders, I think I just mentioned, are weak. Solars are still pretty weak, even though I thought solars were starting to turn back up. Yeah, solars are just, hot trash still. Yeah, horrendous. There is no one individual group that I know for sure is going to lead in the next 3 months. So I'll just kind of have to take it day by day and see if I can find, what that group is. I thought for a moment the food stocks were looking pretty good, with like Shack. And, I thought this one was trying to turn back up off the 200 and we can go on maybe a bigger run. Eat, I thought looked pretty interesting. Cake, I thought looked pretty interesting. But these have kind of been on a run now. What else off the top of my head look pretty good? The hotel stocks could be something that come around, right? Like the hotel / gaming theme, like, Wynn might be turning up. Las Vegas Sands could be turning up. Marriott, the Hilton. But again, are they exciting groups? Not really. So, yeah, what I think needs to happen here is the market needs to have like a 5 to 7% correction, and then when we get closer towards the bottom, there will be stocks that stop going down, and then from there, we can figure out what's holding up best and what's got relative strength, and then the moment the market gives us a follow through day, like it'll go down 5%, 7%, something like that, and then it'll post a follow through day. On that follow through day, then we can look to be buyers. Of the things that were showing most relative strength. Follow through days, Bill O'Neill. How to make money in stocks. Don't mind me, just enjoying a little Starbucks and cheese Danish. Oh, I am ready for Six Flags today. Getting off the desk early. I will be watching the market, though, on my phone while I'm standing in a few lines. We got the fast pass, but it just ain't fast enough. Yeah, personally, I don't know where the QQQ is going to come down to. I was, I keep thinking at the very least, literally at the very least, a little reset of these highs sound pretty good. Yeah, that's roughly aligns with your 538 level. Edgy. I think so. 540. That'd be totally healthy. But you want to be careful being long a bunch of, speculative growth names. In that scenario, stocks get absolutely bamboozled. My thoughts on coin, leave it alone. It just had a bad reaction to earnings. So you need one of two things. You need either institutions to buy it right back up and then for it to show some strength, or it could go for 3 months just being in a downtrend. It just had a bad reaction to earnings. How do I know when that bad reaction is going to change? Right before earnings, the trend was just down every single day. And then it was down some more on earnings. And not just a little bit, $40. So is that really what you want? To be kind of guessing at a bottom? Let it turn back up. Let it build you a new range. Let it tighten. Let it build the right-hand side of the daily chart. It's the daily chart that sends them higher, not the hourly or the weekly or the 5-minute. So, let it build out a whole new base. Stocks that move more than 3% per day in leading groups, clean technical setups. Yadini, I'm live every single day. Every day, same time, 7:30 in the morning Central Time. And then I'm live in the Discord as well every day from 8:30 in the morning until whenever the hell I'm off my desk, sometimes all day. Yeah, AGX looks good, but there's not really a clean setup here. Nice and strong, but I thought the entry was on 723 when it reclaimed the 50 simple. MSTR sympathy with coin? No, MSTR is sympathy to itself. It dumped on its own earnings. Why has it got to be a sympathy to coin? It was literally down on its own earnings. No, I didn't end up entering you. I didn't buy anything. Guys, when the market's coming down, okay, two things, RT. I don't chase gap ups. I definitely don't chase gap ups in an extended market. And then when the market starts to go sour and act weak, I don't buy strength when the market's pulling back. Right? Those are three things that are really good. Don't chase gap ups. Don't chase a market. And then when the market goes weak, all you need to do is track relative strength. Don't trade it. Right? Track relative strength. Don't trade it. Relative strength is just the next stock that gets its ass kicked if the market keeps going lower. But if the market turns up, relative strength is the stock that ends up going highest. Make sense? Yeah, I absolutely do not go buying stocks. Like I had somebody in the room, I mentioned yesterday I was watching IBIT. Right? Disregard this stupid candle that came in yesterday that isn't real. Okay, so I was mentioning watching IBIT yesterday as it was trying to break over prior day high, right? As a potential little breakout, continuation. But then I ended up saying in the room, I didn't buy it because one, the market was acting poor. Two, none of the crypto stocks were acting well. And three, the market started to roll over. So, okay, cool. If IBIT just holds in there, fantastic. But with the market, IBIT started to hit yesterday's highs and instantly roll over. So, there is no buying a quote unquote breakout when the market's coming down, right? Your just likelihood of success is next to nothing. It depends. If it's liquid enough, which most of the times I'm trading names that are liquid enough, but if it's liquid enough that I can exit in pre-market or there's some kind of news that's sending it lower, I try to exit, as close to my stop as possible as soon as it breaks it. But, oftentimes, like in a certain scenario, like for instance, let's see, ARC, right? I knew that I would want to be using this 20 simple moving average as my stop, which is 74.5, excuse me. And now we're $2 below that. Well, we're gapping $2 below that, but I'm already trimmed. So there's really nothing I can do. On the flip side of that, I have taken some shorts. So I'm at least getting paid on the short side of the market, that I'm making money on one side of the market, that my trimmed up ARC position from 59 doesn't really hurt. I'm just giving back a few more unrealized gains, but nothing that I'm not making up already in, call it SoFi this morning. So, that's all you can do, man. That's why I play personally both sides of the market. I know if you're long bias only, your equity curve goes with your long positions only. I'm very comfy playing both sides, and I look for, setups that I can trade on both sides of the market. So if the market begins to come down and I get stopped out of longs, I at least have something working. Utilities look good, but I think everybody and their mother is playing the utilities. And by utilities, I mean something like GEV, CEG, VST, POWL, PWR, these like power up your data center plays. Fine, but they're a little bit, what's the word I'm going to use? They've already been on the move for a while. Right? Like, I don't look at this GEV and say to myself, yes, it probably ends up going higher in time, but I wouldn't be thrilled to buy this here. So it's like you're late to the theme. And again, you could be right on time to the theme if it just consolidates. You see how and I give this example all the time. You see how GEV went on this beautiful run here? It then paused for 7 weeks. You see this sideways digestion where it just goes sideways for 7 weeks, right? The GEV could go for that again, but up here. I know people hate, they're so impatient. They hate the idea of, digestion that long. Yeah, NNE is the short in that group for sure. It looks like a real POS to me. I mean, imagine that Oklo just hit 80 and this thing's it's beneath May's high. Talk about a turd. Yeah, and then he's the one to short when Oklo and SMR go weak. It's the same thing. Like, I'm sitting short Joby, but I really shouldn't be short Joby. The one I should be short is Archer. You guys want to see the turd? There it is. I shorted Joby on the 21st, which is this day here for Archer. Man, I wish I shorted Archer instead. But instead, I picked Joby like a total fucking idiot, and that's exactly what I am. I deserve to be making only 50 cents a share. You get what you deserve. Don't pick on the stronger name, pick on the weaker name. So yeah, kicking myself a little bit for that one. What do I see when I look at MP? An extended stock. What do you see? When you look at MP, what do you see? I see a stock that's a mile away from its 50 simple moving average. It's up 60%. It's up 10 times its average true range from the 50. In other words, It's not viable on this planet or any other planet in my portfolio. Maybe it's viable for somebody else in their portfolio, but it's definitely not one for mine. I'll tell you that. You see a big move in a consolidation. I see a big move and not a long enough consolidation. We see the same thing. I just know for a fact it hasn't consolidated long enough. And if it decides to go from here, this little incomplete baby setup after this gigantic move, well, you can get away with it maybe once, but you take 1,000 trades in your career, this extended from the 50, and you're going to hate yourself. I've said this before. You're not going to like the results over the long term. No, when I'm trailing, I'm just watching the 10 and the 20. But when I'm buying something, I measure the extension from the 50. I see a high type flag Kulamagi would not buy. You must have not watched all of Kulamagi's videos, because Kulamagi said that the biggest moves occur next to the moving averages, not this extended from them. Exactly, he would say, Ryan, he would say it needs more sideways. And I would say it needs more sideways. More than 4 times its average true range from the 50. So if the stock moves 3% per day, then more than 12% is too extended. If the stock moves 8% per day, then over 32% is too extended. You know, give or take a little percentage point or two from that, right? 4 to 4.5 times its average true range from the 50. But once you get to 7, I'm trimming, and then every ATR after 7, I'm trimming some more. And then at 10, 11, 12, and 13, I'm thinking that I need to be close to fully out of the thing. Unless, of course, it just starts to go sideways and then, we begin to consolidate. Yeah, he says that about a lot of stocks. You know why, Evan? Because everybody who's watching his stream gets FOMO, and they're watching the stocks that have already gone up, and they're improper setups. Those are the stocks that people gravitate to, the stocks that have already made ridiculous moves. And so the only answer for them is it needs more sideways. It needs more sideways. It needs more sideways. That's because people are late to the party. Dude, you're splitting hairs, man. It makes no difference. You're asking a completely irrelevant question, Christian. And I'm not saying that to be mean or anything. It doesn't matter. The 20 SMA or the 21 EMA makes no difference. If that's your focus, you're focused completely on the wrong things. Because it makes zero difference to the underlying trend. It makes zero difference to the group it's in. It makes zero difference to the entry tactic. It makes zero difference to how long you hold something. It makes zero difference to how you trim it. It makes zero difference to how extended it is. It makes zero difference to about everything, right? Doesn't matter. It makes no difference. I use simple moving averages because they take weighting of the entire trend over the 20 days. EMA puts more weighting on the most recent bars. Exponential puts more weighting on the most recent bars. But it makes no difference. It's not the reason I enter something. It's not the reason I sell something. It's not the reason for anything. Yeah, I don't know if Spotify's a short right here. Could be, but it's already down quite a bit. 20% short in a short amount of time. Who knows? Maybe. Netflix is kind of just falling lower too. Yeah, I don't see much to do today. Look for pops in the morning and then things to short. That's kind of my thinking. Look for pops to short. Well, here's the thing with Bitcoin. Bitcoin is still a crowded short. So I would personally expect, I hope it doesn't get more crowded on the short side. That's honestly my hope. That would not be good. No, I don't want to pick on Hood. You know, it's like I just got done saying I wish I were short Archer instead of Joby, right? So like I shorted the stronger of the two names, and that turned out to be a mistake. I don't want to short Hood, which has been one of the strongest names in the entire market, right? It's like there are other shitty names to short. Pick on one that's been a little weaker. I also don't want to short AAOI because I eventually am looking for a long into this name. Again, if you want to short it because it's losing the 200 and the 50, fine. I think, you know, obviously that's what makes a market. But personally, I don't want to short a name that I would be looking for a long eventually. No, I'm drinking. I don't know what the hell this is. Babe, what is this? My love? What's this coffee? Crack. No. It's not crack. What? It is, but what's the name of the coffee? What am I drinking here? Caramel macchiato? Oh, I got it right here. Iced vanilla caramel macchiato. And it's damn delicious. It's got me wired up this morning. Zscaler, yeah, Zscaler, you know, could go either way. You get a pullback into the 50. Does it reclaim? I don't know. You know, cybersecurity names are a little iffy at the moment. Is Bitcoin strong? I don't know that Bitcoin's strong. The market was just at an all-time high yesterday before the big smackdown, and Bitcoin's off of its highs. Is it actually strong? I shorted SoFi because it was extended, right? And you know, SoFi is not Hood. Hood's been a whole lot stronger. Yes, Johnny. When I buy something as a 5-minute opening range break, my stop is the low of the day. Low of the day. I won't be trading FIG. I don't care where it goes personally, but I personally can't trade it. No, Ryan. If I buy a 15-minute opening range break, my stop is the low of that 15-minute candle. Like in a really strong stock, if you time it properly and you buy a 15-minute opening range break, sometimes that 15-minute candle that you use that took out the prior 15-minute candle, I've seen people use the low of that candle because in a really strong stock, even that low won't get taken out. And it's not about the stock. It's about the environment in which you buy that stock. Right, guys? The best buys come after a correction. It's only gotten super whippy for the last month and a half because we already went up 30%, right? And then, of course, it got super whippy. But if you were buying stocks in April, guys, I could have closed my effing eyes. I had zero troubles getting positioned into stocks. I was buying names and they were sticking day after day after day after day. Like I remember I bought Netflix right the day after earnings as a little flat base breakout, 1,000 plus, zero headache. And then the next day I came in and I bought Palantir, zero headache. The next day I came in and I bought Uber, or what was it, CrowdStrike the second day? Yeah, CrowdStrike the second day. Then I came in and I bought Uber and Palantir, or Uber and Crowd. And it was just like, in 3 days, you're in 4 names, and then all of a sudden Oddity's gapping up on earnings, and then that's giving you a high volume close setup, and then Sezzle and Dave are gapping up on earnings, and those are following through in a big way. And it's just like everywhere you look, and then Hood is getting ready to go higher right after earnings, right at the 5130 level. And it's just like there's a gazillion stocks heading higher, and it has nothing to do with like some perfect entry. It has everything to do with the environment. But everybody then sees the market go nuts. They don't really own any stocks because they're a bunch of day traders or impatient traders, and sometimes myself included. And you can't get yourself repositioned way down the road because things are way gone, and then it becomes choppy, and then you buy the 5-minute opening range break. And that's when I started to say, end of July, like end of, June, where I would just say pullbacks into ascending moving averages is the way to go. Right? Don't be buying stocks on breakouts. Buy them into ascending moving averages. And Victor, it's not so much that I'm going short near the highs. I don't know for sure that these are the highs. But what I do know is that I'm being rewarded on the short side now. Right? I'm maybe not being rewarded big time like on a Joby, but I am being rewarded on Rigetti, and I was rewarded quickly on SoFi, and I had a super nice short on Donut, and I had a really nice short on QS for a day, and I had a really nice short on GoPro for a day, and right. So I'm just doing things that align with the current environment, which is speculative turds want to come down, right? And like even today, like I'm watching ENVX. Why would I be watching ENVX? Well, this nonsense reminds me a little bit of QS. And what's QS doing? $8. $8 effing dollars, guys. It was all the way at 15, just lost 50%. 50% basically. You look at AVA, 50%. I mean, this thing hit $16 this morning from 38. From 38, 16 effing dollars. Oh my goodness. You talk about a Christmas tree pattern. Oh, shit. And then, you've got OUST. I don't know that it'll look identical, but I'm pretty sure that this is going to come down to the 20 and probably lose that $20 level, or come down to the 50 and lose that $20 level. And then TSSI is another one of these, hyper nutty turds that, likely ends up losing the 52. Donde están los setups? It's funny. If you do handstands, they look pretty good if you're looking for some shorts. They look like nice bullish setups. Guys, it is 8:20. I'm not streaming all day today in the room. I'm off to Six Flags in about 2 hours. So hopefully you guys have an awesome trading day today. Please enjoy your weekend. I will see you guys on Monday morning. If you guys got any questions, you guys can always message me right on YouTube or on X or in the room if you're in it. And I will see you guys on Monday. Trade them well today. Don't do anything crazy. Get ready and enjoy the weekend. Thanks, Johnny. See you on Monday, brother. Thank you, guys.